Everybody, this is Jim at SP500chart.com. It's about 4:45 on June 25th, 2014. Let me remind you that the website and this video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, it's kind of interesting today because we left yesterday with the idea that possibly this light green line could provide some support. But then we also came into the day with the idea that this gray line right here, and I'm going to change the color of that. Let's just make it kind of a dark orange, call it a brown. But that this line could produce some resistance. And lo and behold, what we ended up with, if we zoom in on this, is the answer was yes on both counts. So what we had was a pretty quick little bounce. We came down and momentarily traded a little bit lower than yesterday, but then quickly rebounded to this line and tested it twice and got just an eyelash over it at one point, but certainly not enough to get excited about. Now this is where it gets interesting. Obviously, if both of these lines continue to do what they did today, then this will continue to be support and this will continue to be resistance. And if that's the case, the good news is the way these lines are diverging, there's room for that to actually happen, and actually, at least in theory, the S&P could stay between these two lines for a very long time, and we could make that 1990 target, no problem. But this is where the little catch is. If I look at what we saw today, and I was not thinking about this line being resistance or this line being support. If I was just, this line doesn't exist, this line doesn't exist. If I were looking at this just on face value, then I would be looking at a very likely bear flag. And these would be the defining boundaries for that flag. And almost all of this formed today. So this is something new we get to put on the chart. Of course, what is the confirmation? Well, the confirmation will be we break this line tomorrow, at which point I would expect at least a retest of this light green line and probably a test on that line with even a little bit more selling pressure than what we saw yesterday. So, you know, guys, I really don't think anything else much happened today that I could wax on about. I do want to remind you as we zoom out on this one more time that if this does play out to be a bear flag and we do start to sell back down, that we have two lines here. This one's probably out of play now. And the reason I say that is because I do not believe that we are going to be looking at a situation where we're going to open at 1920 tomorrow morning. So this line I'm going to make a lighter color. Remember, this was our 40% retracement line that that was from the bottom of our right shoulder of our inverted head and shoulders pattern and the end of the breakout move, which was on June 9th. So just to let you know, we didn't quite come back to that. As a matter of fact, since we broke out of this inverted head and shoulders, here's our neckline right here. Since we broke out over that, we have not, we haven't even come back to any of the textbook trigger buy points. Sometimes you do, sometimes you don't. I think usually you do. But if we do come back to this line before we make 1990, then that should represent a buy, because that would mean that we've seen some weakness and we have yet to make the target. So if we keep going up and we get up to 1986, then we start to sell down. That is not as an attractive position to buy than if we were to just go ahead and over the next, sometime within the next 4 to 5 days, if we came down and tagged this line, that would be a fairly attractive spot, I believe, to go long, as opposed to we essentially meet the target, then come back. And let me just explain that one more time. If you have a target and you don't meet the target and you come back to a buy point, your target has not been met. You still reasonably expect the target to be met. So that makes a move back into the mid-1920s, if that were to happen over the next 4 or 5 sessions, that would be more attractive than if we made it up to almost 1990 or made 1990, then came back and tagged this line. Because upon tagging this line at some point after having met 1990, you can't say to yourself then, we have an expected minimum target that's still alive, because it would have been met already. It's hard for me to put that in concrete words. I hope I said that clearly enough. So for right now, just concerning ourselves with the morrow, we bounced on this line. Yes, thought we might. We really did not get over this line. Didn't think we would. And we have formed what appears to be a potential bear rising wedge in the shape of a, which would operate as a bear flag. If we break down out of this, we should come down to challenge this green line again. And if it breaks, then I'm thinking we really don't have anything to pick us up that I would necessarily expect any degree of support from until we get down to this line right here. So guys, there's your video for June 25th, 2014. I hope I said that right. I was, at one point when I was talking about the target and the pullback, I felt like I was maybe being a little unclear about that, but let's just, suffice it to say that as long as we have that 1990 target that has not been met, then that still is something that we have a reasonable expectation that it will be met. So the lower we can get in at a buy point, the better. So guys, thanks for watching. Take care.